Hello everyone. So today I will give a case analysis on the Amazon.com Incorporated merger with Whole Foods Market Incorporated, which took place in August of 2017. So Amazon.com Incorporated was founded in 1994 by Jeff Bezos, and their headquarters are in Seattle, Washington. And Whole Foods Market Incorporated was founded in 1980 by John Mackey, and their headquarters are located in Austin, Texas. Whole Foods Market Incorporated is a subsidiary of Amazon.com Incorporated. For the fiscal year ended December 2021, Amazon.com Incorporated reported revenues of $469,822 million, which was an increase of 21.7% over the fiscal year ended in 2020. And in the fiscal year ended 2021, Amazon.com's operating margin was 5.3%, and in the fiscal year ended 2020, they had an operating margin of 5.9%, and in the fiscal year ended 2021, Amazon.com recorded a net margin of 7.1%, and in the previous fiscal year, they had a net margin of 5.5%. Amazon.com Incorporated is a retailer that offers its products through online, like on its website and on its mobile apps, and through its physical stores like Amazon Go and the Whole Foods Market stores that it owns. And the company offers a range of merchandise, including books, apparel, home and garden tools, electronics, and other products. And it also provides services such as web services, order fulfillment, publishing, advertising, and co-branded credit cards. And it markets its products through its website and its mobile app. The company also markets its products through websites like internationally in other countries. It has business presence across North America, Europe, and Asia Pacific. And Whole Foods Market Incorporated is a natural and organic food supermarket chain, and the company has store operations in the United States, Canada, and the United Kingdom, although most of its businesses are located in the United States. I want to say it has over 460 businesses in the United States. And Whole Foods also sells its products through its online website, its mobile app, through Amazon.com's website and mobile app, and through the Amazon Prime website and mobile app. In August 2017, Amazon.com Incorporated acquired Whole Foods Market Incorporated for around $13.7 billion. And when this merger happened, like when the news was announced on June 16, 2017, the stocks of other grocery store chains decreased. And also after the merger took place, many grocery store companies such as Kroger and Walmart and Albertsons started charging lower prices on their products. And they also offered a section of organic and natural produce. And they did this in order to compete with Whole Foods Market, since they knew that it was now owned by a company that's a big factor in the U.S. economy. And also when the merger took place, there were price reductions on various grocery items at the Whole Foods Market stores, and their private label that they had was now offered on Amazon.com's online services. And before the merger took place, that Whole Foods Market had no way to do that. And due to these changes, there was increased traffic in the Whole Foods Market stores, and this caused the sales of its products to be increased. So when the merger took place, people argued that Amazon.com Incorporated became a monopoly in the retailer business when it acquired Whole Foods Market Incorporated, because Amazon now owned its online retail business and the brick and mortar grocery store businesses where it could continue to market the products that it sells. And people also argued that Amazon acquired Whole Foods because it knew that Whole Foods was struggling in the grocery store chain composition, and in the competition, and it wanted to use Whole Foods brick and mortar businesses to continue to sell the products that they already had in the stores, and to sell some of their products in person, because before the merger took place, Amazon was only able to sell its products online. And when the merger took place, Whole Foods Market only held a 3.5% market share, and Amazon.com Incorporated was able to use its economies of scale after the merger took place to be able to charge lower prices on its products than other grocery store chains, which increased the competition in the grocery store chain industry. As well. And I definitely agree with the court's decision to allow the merger to take place, because it allowed the competition in the grocery store industry to increase, because it allowed various grocery store chains to charge lower prices on its products, especially like its produce, and it allowed businesses like Kroger and Walmart to offer a section in its stores that were dedicated to the natural and the organic produce. And it had allowed Amazon.com Incorporated to enter into the brick and mortar grocery store industry and use the experience to gain insights into what the consumers enjoy and value, so they could use it to have a competitive advantage over other companies. And now, because of the merger, Amazon has a distribution center and a company that has contracts with people that have local and organic produce.